The RBI is trying to pump money into India's banking system. See, India's banks are suffering from a liquidity crisis, which basically means there's not enough money going around. And if there's not enough money going around, banks will struggle to give out loans and consequently have to beg people for deposits. Sort of like what they have had to do these days. But the RBI is trying to fix this. Yesterday, it announced a three-pronged strategy, and the biggest aspect of this is something called an OMO, or an open market operation. The way the OMO works is simple. The government typically issues bonds to fund its financing needs, and a big chunk of these bonds are typically purchased by banks. But now the RBI is saying, hey, I buy those bonds back, which basically means the banks can sell the bonds and get money in return. And what the RBI has announced is worth a whopping 60,000 crore rupees. It's massive. So having that money come into the system will sort of fix the liquidity problem. It'll help banks boost credit and eventually help boost the aggregate deposits in the system too. So that's one way the RBI is going about things, and with the budget coming up this week and an RBI meeting soon to follow, you can bet there's going to be more on the cards to boost liquidity and growth in the Indian economy.